Hi everyone, let's go over my low time frame bearish and bullish Elliott Wave scenarios on Bitcoin, starting with my low time frame bearish scenario where we are still expecting a move to the downside in a wave 3, either a diagonal or an impulsive structure. Now, because this wave 1 counts better as a 3-wave structure on the lower time frames compared to a 5-wave move, we have to think about a diagonal, because then all of the waves are going to be 3-wave structures in a wave 1, 2, 3, 4, 5, which then leads to a contracting diagonal. But we do have a bit of a problem here, because in a diagonal, first of all, the most common targets for a wave 2 in a diagonal to the downside is the golden pocket to the 886, and as you can see, these have not yet been hit. We hit the rare target being the 382, and also wave 2 has to be a zigzag structure, meaning we're going to be looking for a 5-3-5 move to the upside, where then wave B, in this being an ABC, is not allowed to take the low of this wave 1. However, as you can see, price over here took the low of wave 1, which is not allowed for a wave 2. So that then means we have to move this wave 1 to the right side for then the potential of a zigzag like this to the upside. Also, of course, we have to then move the Fibonacci targets with it, and then we didn't yet hit any of the targets, even not the 382. Also, it becomes very difficult to count this then as a zigzag, because yes, double zigzags are allowed in a diagonal, double, triple, or single simple zigzags are allowed, but then this has to be a zigzag. And on the lower time frames, this move to the downside is not really looking like an impulsive structure or any form of a zigzag structure in a 5-3-5, because then we have to think about a diagonal. The problem here is that this final move in a diagonal, and then a 1, 2, 3, 4, 5, is longer than wave 3, which is not allowed. It is longer in price. It goes past the 1-to-1, taken from the high to the low to the high over here, which is not allowed in a 5-wave diagonal to the downside, in a contracting diagonal. And a contracting diagonal is much more common than an expanding diagonal, and that would be the only way to count this as a zigzag or some sort of a zigzag to the downside. But as I just mentioned, it's very unlikely this structure over here is any 5-wave structure. So that then lowers the probability of this scenario in general being correct, because wave 1 over here looks not really that likely, and of course for a wave 2 price has to move much higher for then a wave 3 to the downside. If we look at the low time frame more bullish scenario, we are looking for a move to the upside and then a WXY, where inside wave W we then were looking for an expanding flat ABC, very nice indeed, for a finished W structure, for then a finished, likely, at least preferably, wave X with this low over here. The reason being that this low was made on our support box, which I now already removed. We had a double bottom over here, liquidity has been grabbed, and we had a daily naked point of control as confluence, but below this low there is not much support left. So if I open my support areas, as mentioned, I removed the one over here. The next one is all the way down here at around 27k. So that is quite a move to the downside. And as it stands now, my basically final bit of support is the double bottom that you see on the chart at 28,946 on my Coinbase chart over here. And that is again a double bottom. Some liquidity here. You could argue there's actually a triple one or maybe even a quadruple one, because we have a couple of lows. But this double bottom for me is very interesting. So if price would move to the downside, this for me is a very, very, very important area. Preferably what you then like to see is this area being held as a swing failure pattern move. So a move down, wicking below the lows, closing above, for then a move towards the upside. And the way swing failure patterns are traded in general, of course guys, no financial advice, we're on YouTube, you guys know that once the candle closes above, stop loss goes below the low, wherever that is, and then you're going to be looking for a move towards the upside. So that is going to be something that at least I'll be looking for as a support area, because below this double bottom, if price is closing candles down here, well, first of all, it becomes very likely you take this low, then you're going to very likely take the other low and just move towards the downside, because there's not too much support over here. Only between where price is now and the 27k area, we have a point of control of a volume profile of a big range on the left, like big range over here at 27.9k, but that is still incredibly low and is very, very low probabilities for price going then back up all the way to what I think is an interesting target, being 30.4k. Now we have been talking about this area for a while already, mainly because there is a triple top, which is very, very interesting from a liquidity point of view to do the same thing, basically wicking above, closing below, for then a move towards the downside and continuation of the local trend towards the downside to then indeed attractive levels of around 27k or even 26k. Now if we look more locally, we are then looking for a WXY structure as mentioned, an expanding flat in W, preferably X finishing here, for then a wave Y to the upside, where the most common target area for a wave Y is between the 0.618 and the 1.236, taken from the low to the high of W to then the low of wave X, which then is between 29.5k and 30.2k. A rare target for wave Y is the 1.618. So you do see that the 30.4k triple top is between the common target area and the rare target, but hey, it is still inside the target area for a wave Y, and we have to wait and see how price then develops towards the upside to get a better idea of where price is eventually going to find its resistance for a continuation of the downside in this local bullish scenario. Now, if we look at the confluences above price at the moment in confluence with my target boxes, we already hit the daily at 29,174 for then a rejection over here, as you can see. So that was quite a nice rejection. We do have a weekly naked point of control at 29,225, which is important resistance as well. And then above the weekly naked point of control, yeah, we do have a time naked point of control as minor resistance, a daily at 29.7k, which is more important. And then above that, we are going to reach the resistance areas that I actually have as a target box between 30k and 3123. And then also again the 30.4k area with the triple top, but all the way to 30.6k. That is an interesting resistance area indeed. If we then look at the CVD divergences, then we do have bullish CVD divergences that are new over here. So these ones were already on the chart in my previous video, where the target is then this high. But more locally, price started to create some bullish CVD divergences as well. Now it's absolutely minor, so I'm not sure if you can even see it on the chart here in the video. But if I move my cursor, look at the horizontal line of my cursor, and if I move it to the low on the left here, in confluence with the low of the blue line, and you then look to the right side, then you can see that on the right side now, the blue line has dipped very minor, like very slightly below my horizontal cursor line, meaning this CVD line here is below the one over here. So we do have some bullish CVD divergences. However, as you can see, we also have the bearish one, because if we go to the 5-minute, you can see a lower high on price, a higher high on the CVD on yellow as well as on blue. So we do have bearish CVD divergences as well, which I then put on the chart with the red lines that you can see. So potentially, of course, we have the bullish CVD divergences. These appeared first, and probabilities wise, the one that appears first has the highest probability of playing out. However, if price would move to the downside, that's of course an if, and take the double bottom that we have, these bullish divergences very likely are going to move to the downside. So if price would move to the downside to take this liquidity and you get some sort of a swing failure pattern, it's going to be interesting to then also look at this CVD chart over here and then check if there is bullish CVD divergences with the new low that's been made. Because of course, if price is moving down, you want to see either yellow or blue again being below this low, or for yellow, this low over here. So that is something to pay attention to. Of course, if price pushes and takes this high, then this bullish CVD divergence has played out, because that is the target, right? So the moment this high is taken, then we neutralize the CVD. So if we then look at the probabilities, well, honestly, for me, the probabilities are still higher for a move to the upside. The low time frame bearish scenario just doesn't look too great. Of course, there's always a probability, right? That's why I say probabilities. There's no certainties in trading. There's always a probability it goes down. And if you have a strategy and your own entry requirements, of course, one can trade that if you see everything and all the boxes are ticked. But from an Elliott Wave point of view at the moment, what we see locally over here, especially because this counts much better as a 3-wave structure instead of a 5-wave move, the probabilities are higher for a move towards the upside. However, I do keep an eye on this double bottom, because if price would move down, and over here we are at resistance, right? You want to see this broken, maybe a retest for continuation. That would be very attractive. But as long as this is not passed, right, it is resistance, not support, and we have support over here. So if price moves down, this is an area I'm going to be looking for. If price does not find support here, but is going to push to the downside on high volume, well, I'm going to be looking for lower levels. It is as simple as that at the moment. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.